How you guys doing today? Today, let's talk about a statement closing date and a payment due date when it comes to your credit card. I'm going to explain what both of those things are, so stay tuned. My name is Jay, and welcome to Ask a Debt Collector. Now, I've been in the debt collection industry for over 15 years. I've done it all, from skip tracing to collecting to management, and I've owned 2 debt collection agencies. For the past 8 years, I've been the go-to guy for friends and family for questions regarding debt and credit, and now I want to be that person for you. If you have any questions, put them down in the comment section. I promise I'll answer those questions. Let's go. Who doesn't like free stuff? I like free stuff, especially if it's free stuff that's going to help improve my credit. I have, I believe, 4 things. Let's go over them. Free pay to delete letter, down in the description. Free goodwill letter, down in the description. Free cease and desist letter, free credit repair consultation. All those things are free. Check them out if you need them. They're here to help you out. 50% off of DIY credit repair. It's a great system where it explains exactly from A to Z what you should do with regards to repairing your credit on your own. It has the letters, it has all of the information that you need with regards to repairing your credit. 50% off. The link will be down below if you need that. Frugally Keto, if you want to lose weight. My wife, Frugally Keto, Frugally_Keto on Instagram. Frugally Keto is the website. Check it out. Let's lose some weight. I've lost 20 pounds. Lastly, books, dreams, and financial things. You guys, I can't explain how excited I am about this. Number one, this is the first business that me and my wife have started together. We started a while back. There are about 43 episodes already up. We are revamping it, redoing it, and getting it back going again. Books, dreams, and financial things. It'll be down in the description. Check it out. New episodes should be recording next Tuesday or Thursday. I know I've been talking about it for some time. We've had some issues that come up. Obviously, we'll explain and talk about those in the podcast, but check us out. Books, dreams, and financial things. Let's get to credit cards. Let's get to the topic that I was talking about. Now, credit cards can be very confusing at times. There's so much intricate things that happen with credit cards. Revolving credit, credit utilization, credit closing date, credit statement dates. There's all this stuff that's out there. The better and better you're educated, the better you'll understand all this information and what to do with this information to help improve your credit and help move you to where you need to be. First, the statement closing date. Let's give you the definition of that. It refers to the last day of the billing cycle. Generally, this date occurs 20 to 25 days before you owe your payment. On the statement closing date, you'll be able to prepare to pay your credit card bill because the issuer will calculate any monthly interest, charges owed, and your minimum payment. Okay? So that's what the statement closing date is. Now, definition, your due date. It's when your payment is due on your statement balance. This date is when your payment is due for charges made from the previous billing cycle. The closing date, as stated earlier, is the last day of the billing cycle and the point in which your finances charge are calculated and added. So let's break this all down a little bit more for you so that you can understand it, okay? Your statement closing date is when you receive your credit card statement, okay? You generally have about 21 days after your statement closing date to pay your credit card bill. Your payment due date is the deadline for making your on-time payment. Very important date. If you do not pay your balance off in full by your payment due date, you will need to start making interest payments, right? So your statement closing date is basically given to you 21 days before your actual your payday is due, right? And it's done from the previous billing cycle. So with credit cards, whatever you spend in the month of basically April, in May, some date in May, you're going to have the due date for what was done in that time span. Now, if whatever you spent in that time span, if you pay it on your due date, the total amount, then you won't have interest. That's why I say use your debit cards like credit cards. But in the event for those of you who leave a balance, then after that billing cycle happens, if you make the minimum payment on your credit card, the next billing cycle, they're going to add interest on that, and you'll have the interest that you have to pay from that on top of the minimum payment. And typically with credit cards, as we know, depending on what type of credit card you have, that interest can be anywhere as low as 0% APR all the way up to about 26 or 28% APR, I believe. If I'm wrong on the high end APR rate, comment down below, but I believe it's about 28%. Understanding the difference between these two dates is very important. The reason why is because a lot of times people think the statement date, they take that statement date, which will give you that minimum payment, they'll pay that minimum payment, and then you don't understand how interest is calculated. Versus your due date, when you have that minimum payment, they'll give it to you, and they'll give you a heads up about 3 weeks ahead of time for you to understand that on that pay date, if you don't want a late payment, 30 days past due, a ding against your credit, you make that payment at that time span. You can always make it when you get the billing cycle as well, just in case you forget, so that you can do it. But ultimately, you should never forget. Why? Because you're using your credit cards like debit cards, and you're only spending on those credit cards what you have in the bank to actually pay back the credit card. Now, in the event of an emergency, you can use that credit card for that. You may have to pay some interest, but if you're budgeting, you should have a certain amount of money that you're saving each month anyways that you're putting in your savings account, so that way if an emergency does come up, you can still use a credit card, get the points for the credit card, and in your savings account, you should have the money to pay it off whatever that emergency was. Now, if you have any questions about credit or debt, put them down in the comment section. I promise I'll answer them. Be sure to like and subscribe to this YouTube channel. Share this video with your friends and family. And as always, you